weekend all. Ira Epstein of Linn and Associates with your weekend edition of your metal market update, and this is for Friday. We're on the 17th of January 2020, about the 4:35 in the afternoon. Had my eyes dilated from the eye doctor at 1 o'clock, so if I don't see well, put up with that. Remember, we have Martin Luther King Day on Monday, so many markets will be closed early. Some financial markets will be open in the electronic Globex trading and the ICE platforms. Most will close by noon on Monday, reopen, not all of them, but most of them, at their normal times after 5 p.m. Monday. If it's confusing, I don't create the rules, but that's how it is. This is a big week because we had 3 events that have taken place. First event that I'd look at is the U.S.-Chinese trade deal, positive. USMCA passed in the Senate, positive. And then we have the impeachment. Now, I know you're going to say that's not positive, but the fact that it's begun is a positive. It's not out there hanging over the market. I certainly don't know what's going to come up in the trial. We could have anything. There could be wild things. There could be nothing. We don't even know the rules that they're going to set in the Senate. So calm down. We'll see how it all plays out. It takes over the airwaves starting on Tuesday. Let's see where that goes. I started this week my Spider ETF videos. They come out for subscribers, and anyone that's a paid subscriber of mine right now gets them if they're in the full subscription or my morning subscriber video. They are getting those. They get access to them. I put them out 3:30 to 4 o'clock each afternoon. So that's where I'm covering now all the ETFs that you used to see in these videos. They're not here anymore. They're in that video. The good news for you is I'm about to start now an end of the day generic video like these for a number of the spiders and ETFs. So let's get into the market. The first thing, gold up strong, back to the 1565 level. Silver up nice too at the end of the week to the 1807 zone. As we come in and we look at a monthly chart, this is the highest we've been on a monthly chart in a long time. If you come back here, you were at 1559. Well, that closed. Let me take this settlement for you. That settlement's 1465.70, right? Then we came down, and now for this week, we've got a close that isn't as high as that, but it's at the 1460.30. It's always important to look at a monthly chart and then get an idea of where the highs, the lows are. And in this chart, we're back to a Bollinger Band resistance as well. When I come to a weekly chart of just closes, closing prices only, it's the best level or close to what we've had. Here was the highest that we had coming into this week, 1560.10, 1560.30 today. Even though it's just 20 cents. Still a solid move. You haven't been at prices like this for a very, very long time frame, certainly over a year and a half or so. When we look at the regular weekly chart, I said that wrong, the weekly chart, you can see how the market's been, if you will, pausing for a bit right here. When we take a look at the swing lines, they're still bullish. You still have a pattern of higher lows, higher highs. Now remember, if you've taken my charting course, it's so much easier if you watch these and you take the charting course. The charting course explains how I draw, and it's actually not me by hand. I wrote an indicator to do this so that you can easily see is the market in a trend or not. An uptrend's defined as higher lows, higher highs. A downtrend, lower highs, lower lows, and you filter it with moving averages and the other indicators that we're going to look at. The trend in this market, even though you're in a correction from a spike on the market, still up. The market's over the 18-week moving average of closes. Therefore, the bias is up. This is the 100 and the 200-week average, way under the market. But what do markets typically do? Typically, they don't trade and stay outside of Bollinger Bands. Certainly, when they first get a narrow range to break out and get a move going, you break out of it one way or the other, and you do get overbought or oversold. But this is not as narrow as this was. So when the market got up here and it broke out to the upside, staying over that number, not the easiest trick in the world. And seeing the market pull back under it, I'm very happy that it's done that. A real bull market can lock in and just ride these bands, get over it a little, back under it a little. I'm hoping if you're a gold bull, and there's no reason on this chart not to be, that that's one of the scenarios we may get. Momentum, still positive. Remember, I look at momentum one of three ways. On a weekly chart, it's overbought, oversold, or another way to say it, pointing up, pointing down. There is no overbought, oversold, and it's neutral. Those are the three. So you never get overbought, in my opinion, on a chart on weeklies or oversold. I let other traders try to explain that. I've tried it, and I'm much more satisfied doing what I'm saying. Silver is not as strong as gold. As long as the silver stays over the 18-week average, it means that in terms of how many ounces of silver you need to get 1 ounce of gold in a perfect world, no commissions, none of that, this should be under that number. It's not at this point. So silver's a bit weaker than the gold. You can see the silver hit the upper Bollinger Band, threw back from it. What's the pattern here? Not as clear as gold on a weekly chart. You've got a lower low, higher high. That is not the same as having higher highs, higher lows. Now, to get the uptrend going, what the market needs to do is not take out this week's low. That's all it has to do. I created the swing line indicator, so I know how it works. It would then have a higher low, higher high. Certainly, if you take out this week's high, and that high was 18 and a half, well, then I'll be looking to see where the Bollinger top is for the next resistance, and it's close to 1850. In the copper market, you got up and over going into all the talk about the U.S.-Chinese trade deal, and this is the week of December 27th. Sounds far ago. It isn't far ago. Over the upper Bollinger Band, and you were staying over it. Well, the odds of staying over it's only 5% of the time. So the market went into a brief correction the week of January 3rd, stayed like that, fighting at the 100-week average, and this week the market took off again. Now, the good part is, again, it hit that resistance of the Bollinger Band, didn't exceed it. Now, what we're seeing is on pullbacks after a spike higher, the 100-week average is acting as the support. Momentum is up, trend is up. The market's in a bull trend. We'll see if it can add to that. In the platinum market, up and away you went. You've been in an uptrend. I think you'd agree with me. I'll take you right back here. That's December 27th, same time frame. Higher lows, higher highs. Trend up. What's the bias? Up. You're over the 18-week average. What do I say here often? The 18-week average is the line in the sand. That's where you're at. What's momentum? Pointing up. So the resistance would be the Bollinger Band, the first challenge of it. Market backed away from it. Now, what the market did this week is it ran away. Well, still staying over, it's excessive. That doesn't mean you can't pull back to it. Is there anything bearish other than it got excessive? I don't think so. The palladium, bye-bye. The bears are just nailed. Anyone short this market going home is losing, basically. The all-time high is 229.80. You finish this week, not quite there, at 224.90. So somebody does have $70 of profit, or some group of people in between there. But the mass of the people that have in this market are probably under some water. The market got ahead of itself. Again, when you're over a Bollinger Band as bullish as you'll get, I get restrained. I've learned that. I'm looking for it to pull back in, and when it does, you take another fresh look at it. Does that mean you're out of longs? Absolutely not. It means that you peel them out, you put them back on. That depends on your style of trading. In the dollar index, it's a pretty rough market to trade right here. The daily charts and the weekly charts have diversion. The weekly, and that's why I've got this on here, you've got higher lows, and now you can argue that with today's high, you took out this high. Prior to this, you had lower highs. Where's the market in terms of the bias? Down. It's still under the 18-week average. So yes, the swing line has knocked the market out of the bear campaign that it had going on. That's over. But would have to close over the 18-week average of 97.61 to turn bullish, and I would turn bullish at that point. And momentum is up. I see just plain divergence all over the place on this chart, so you want to be careful. By the way, this is how the news looks, and I like to show that every now and then so you get to see it. Now, one of the things I pride myself on is, number one, my work ethic. It's crazy. But number two, I wake up 4:35 in the morning, and I do a massive amount of reading, and by 6 a.m., I start recording for subscribers that like the futures markets, 40 charts. In those 40 charts, I'm going to give you my trade ideas for that day. Now, some will be longer term, some will be shorter term. I will tell you what I'm seeing on that. The whole purpose here was the 40 charts. Now, we have not changed our ad yet, so let me correct this. There are no more ETFs in there. No spiders in there. Do you know why? I started a new service. It began on Monday, this last Monday. It's out already. Everyone that gets my morning subscriber video is automatically getting that at this point in time. I cover there all, and I mean a lot of different spiders and ETFs. A chart to me is a chart. It's really that simple. If you're a chartist like I am, that's how you look at it. So I'm giving you the trade ideas here, and I'm giving you my spider ETF, and that's the idea. Technical analysis, a touch of fundamentals, both in the spiders, the ETFs, and these videos. I'm going to tell you where I think you get in, where the profit objectives are, where I'm wrong. Stops are super important. Maybe this just gives you the confidence or the know-how you need. Now, be it the new videos we have or these, they will list for you, and they do list out. I have the different sections that I cover. When you pull on our website on the scroll bar, it lights up the different section you're in. So let's assume you want to know about the metals. You really don't care about the stock indices. You go, just scroll. It'll take you right there. I save you time and effort. What about if you're in the spider ETF video? You want the metals, just scroll right over to the metals section. Done the same thing. Why? People like it. Now, what's the cost of this? To get this, because where I say buy and sell, I don't do for free. It's inexpensive by design. $7.95 for a 30-day trial to my morning subscriber video. After that, it goes to $15 for the next 30 days if you want to stay with it. You can also buy at a discount for the equivalent of $13 a month, a one-year subscription to it. So if you're looking for that something, maybe an idea, maybe you've had an idea and you want to see what I'm doing, that's it. The reason I do this video in the morning is because futures have 22 hours of trading on a typical trade day. ETFs and spiders, 6.5. So I do them at the end of the day so that you're prepared overnight for the next day's morning in those, and they don't open for Chicago time to 8:30. Hope you take advantage. If you want to go to our website, www.iraepstein.com, under the word research, tells you all about this. You have a good day.